When is a good time to reach out about your mortgage renewal? I generally recommend that you reach out about 6 months before your mortgage comes up for renewal. Yes, rates may be in a downward trending environment. However, it's still a good idea to see where you were on your last term and what the options are leading up to your next term. In 4 months before your maturity date, we can start booking a rate for you. And what does that mean? That means that we can hold a rate for 4 months before your maturity. That's a very important piece because where your mortgage is at currently, that lender can only hold a rate 30 days before your maturity date. So that gives you an edge of making sure that you get the best rate within 4 months before your maturity. It also gives us an opportunity to put a plan in place because we may not be just doing a mortgage renewal. We might be doing a consolidation renewal, which means that we're adding other debts that you've acquired over the last term and add it to your mortgage. We may be looking at your cash flow. There may be a change in your home where maybe we're removing someone from your mortgage or adding someone. These are all the things that we can do when your mortgage comes up for renewal. Keep in mind, when your mortgage is up for renewal, your mortgage becomes open at maturity, and that means that we can make changes. Sometimes I get asked from clients, what happens if I do nothing and I just let my mortgage renew on its own? Depending on who you're with, the lenders will either choose to renew you into an open, which is a very high interest rate, or they'll renew you back into a term equivalent to what you were in before. So if you were in a 5-year term, they'll automatically renew you into another 5 years. That might be okay unless your goals and your plans don't align with that. What if you ended up selling your home within that 5 years? Is that mortgage portable? These are the things we want to explore. What if there's a change in your relationship and we need to remove someone from your title? That may cause a penalty. So we want to make sure that we're choosing the right term. It is best to talk about it and it's best to put a plan in place. Unfortunately, choosing to not do anything sometimes isn't always the best solution. Calling us, there's no cost to do so. Talking to us is completely free and there's no obligation. So really, it's in your best interest to give us a call. Did you know that your mortgage is fully open at maturity time? And what that means is we can actually move your mortgage to a different lender. The lender that's receiving your mortgage will pay for that transfer. So there's no cost to you to transfer your mortgage and go shopping for a better mortgage option. Again, every 5 years, you've changed, your financial plan has changed, and your goals behind your mortgage will have changed. Right now, clients are looking at other options besides a 5-year term. Typically, people go 5 years at a time. Why? Because 5 years goes quickly, but 2, it creates stability in your household budget because you know what your mortgage rates are. However, right now, we're in this current rate environment, rates are a little bit higher, and some people are looking at shorter terms, such as a 3-year term, 4-year, or 5 years. And they're also exploring the variable rate. Again, those are options that we can go through with you to see which is best with your financial plan.